Gold prices hit a two-month low today, pressured by talks of a deal on the debt ceiling in the U.S. and a possible pause in interest rate hikes by the U.S. Fed Reserve. Prices have fallen from 60,680 rupees per 10 grams in the Delhi spot market to 59,767. The fall has been particularly steep in the past 2 weeks. We're joined by Navneet Damani, Vice President, Commodity Research at Motilal Oswal Financial Services, and Vandana Bharti, AVP Commodity Research at SMC Global, to discuss the precious metal. Thank you both for joining us. Let me start off with you, Vandana, and get a sense from you, because just when everyone was anticipating gold to hit those record levels, given fears around the US debt ceiling, we've actually seen a complete reversal, and quite a steep one at that, in the last couple of weeks.
Yeah, very true. Actually, it hit the high of $2085, and from there we have seen a fall, and now it is trading near $1950 kind of level, and it is almost a fall of more than $130 in a month time. So yes, the more fall is expected in this market because we have some negative triggers for gold, and one is that there is a positive talk on debt ceiling, and dollar index technically even it is looking high and likely to touch 106, which is very negative for any commodities prices, especially gold. So gold will react on that if it touches 106 or 107 level. Another thing is that in this week we are expecting some positive data, and there are three crucial GDP data from India, Italy, and Germany. And all three it is expected to come in positive zone. So it will again give a pressure in gold counter, bullion counter, in fact, and the safe haven buying we may see it will steal the safe haven buying from gold counter. So in international market we are expecting that there should be a decline towards the level of $19-20. If we talk about the Indian market, 58,500, 58,400 is a very good support, and considering the depreciation in INR, we are expecting that there should be a limited downside in Indian gold market.
All right, so limited downside. Now, Neet, let me get your view in as well, given the, variety of factors at play. Let's talk about the global market first and whether or not you feel some of those triggers have receded, given that the debt ceiling talks seem to be on track now. However, the Fed is yet to hike rates, and it looks like they're going to be doing that.
Well, yeah, to be very fair, gold has its own set of fundamentals which are driving the prices at this point in time. We started the year on a very flattish note, but the rally has got up everybody by surprise from $1,650 to $2,080. That was a non-stop run-up which was seen in gold. However, I strongly believe at that point in time that the markets had overshot themselves and were due for a correction, and that is what we are witnessing at this point in time. Now, to talk about the debt ceiling, I think that's largely done deal, and it's not the first time that debt ceiling overhang is kind of impacting the market. Of course, it gives an impetus to safe haven assets, but that is not getting reflected at gold at this point in time, which gives us an indication that sooner or later, probably in a week's time, we will have some probably conclusive result out of the debt ceiling fiasco. To top it up, we had some banks which were under stress in the US and the expectation of a possible pause over the next couple of Fed meet, but the now chances have now started to once again indicate of a 25 basis point hike as we approach the next US Fed meet. I strongly believe that gold prices, if there is some more flesh or probably some more bad news coming in from macro front or any escalation in the war, then there could be a strong positive uptrend in gold prices. Otherwise, say probably for the next couple of quarters, we've already hit the top and we could be heading downwards.
Okay, when you're talking about some kind of macro triggers there, what are you looking at? Because Vandana mentioned as some of the domestic cues, some of the data that we're watching out for. How confident are you as well of the current macro environment? And does this then really spell perhaps staying away from gold for the moment? If you're looking to invest, would one look at silver instead, or just stay away from commodities for the moment? What's the kind of trading range you're anticipating?
Well, it's the recessionary fear which is gripping the market at this point in time, and probably a possibility of the last rate hike for this run up. And after that, we might see a pause or probably some kind of consolidation or correction in rates as we approach 2024. And that gives me a strong belief that we've kind of seen a lot of bad news getting factored in for the short to medium term perspective, and positive triggers could come in from escalation in war, probably Russia, Ukraine, or China or America participating in the war escalation. That one trigger. or an actual recession which could kind of hit the markets, probably starting from Europe and spill over to US and other economies. If that has to happen, gold is likely to go up, but before that, you will see a sharp dent in the equity and other asset classes, which have been trading closer to lifetime highs. So I think that is not getting reflected at this point in time in most of these asset classes, and safe haven are kind of struggling, which gives me a comfort that even if there is some upside, it could be about 2, 3, 5%. But if there is a downside, maybe it could be a 10% downside also from here on.
Okay. All right. A possible 10% downtrend, that's actually quite significant. Vandana, let me bring you back in here. And you also talked about some factors not really stacking up. For those that were already invested in the yellow metal, should they be looking to book some profits? And for those who were perhaps looking for other asset classes to invest in, would you advise just sticking to equities then, or any other commodities right now if we're anticipating softening when it comes to gold?
Yeah, it depends upon duration. If they have invested for short term, then definitely this is the time to book the profit.
Got
But
it.
if anybody has a vision for a year or 1.5 year, so like I'm still very bullish in gold because see, if we see the economic indicators, global PMI is near 50. Mostly the major economies PMI, they are below 50. Even China PMI is 47 right now. So these things are indicating that the economic health is really not very good, and definitely the safe haven buying will come, and it will reflect in the currency factor as well. So another 25 basis point hike, if it happens, then it may give a temporary downside to the gold prices, but again it will again give the pressure to the economic performance, and safe haven buying will return, and definitely it should start an uptrend from the month of September. Because if we see the seasonality, if we see the facts, check the facts, after since 1976, we have only seen 7 or 8 times that gold moved down in the month of September. So this is the time to go for seasonal buying in gold. So August lower side in gold, it is considerable to very good buying point for gold for the entire year, and fourth quarter definitely will be for gold, and there we can expect that new record high should be made there in international market as well as in domestic market. So for short term, I'm bearish in gold very for very short term. But if somebody took the gold for long time, I would suggest that hold your gold in your portfolio, and it will definitely safeguard your portfolio. And for 2023 in international market, I'm expecting 21 25 in domestic market. I'm considering the new high of 63,000 to 63,500. So again, it will be a win-win situation for 2023 in gold, and it will be another year of hike for gold.
Would you agree? Let me get, let me also get Navneet in on this to understand if he's concurrent with the kind of targets on the higher side here, Navneet. Okay, she said short term we could possibly see a blip, but would you be in concurrence with the target on the higher side?
Well, it's a divided opinion at this point in time, and it's really difficult for the investors also to figure out what's to be done. But you've already seen about a 7% correction in the domestic market, or probably the international markets also, in the last 1 month's time frame. And I think that comes on the back of 20% successive rally over the last four
Yeah.
months. Uh, Now to time it here is a little difficult. Maybe as I mentioned, maybe 2, 3, 5% upside could be in store. But from a medium term perspective, I'm not pretty confident. I would rather place my bets on silver. Probably expecting a revival of in the industrial economies, and probably a strong pent up demand coming in from China. So my money would be on silver rather than gold at this point in time.
Interesting. So moving to silver and the commodity basket, and I'm going to get to share some targets on that as well. But one question that I must ask both of you: all of this spotlight has come on gold because we all know it's the prime safe haven asset, and whether it was the Ukraine war or whether it's all the talk around the US debt ceiling and impending recession, this is really what's led to all of this sinister on the yellow metal. Have we just pushed some of those threats down the line? Are they completely out of the picture, or would you say that there is still a possibility that one should get into the yellow metal now with an eye to perhaps some of these factors becoming center of focus in the next few months? I mean, how are you viewing the current situation and the global dynamic, Navneet?
Well, I think most of the tailwinds have now started to become actual headwinds at this point
Yeah.
in time, and we've seen that interest rate maybe one interest rate or 25 basis point or at max two rate hikes could be stored, but the spillover effect on banks is what is going to be very critical, and how they're going to fare up, and how probably they will sail it out through the kind of crisis that is building up is going to be very interesting, say probably in the next couple of quarters. That gives me a sense that prices might float or might not correct very significantly. I think Ukraine Russia war is now out of sight and out of
Yeah.
mind, because it's been about more than 1.5 years that this is an ongoing thing, and unless there is a full blown escalation here, I don't think that will be impacting gold prices much. And now inflationary concerns have also started to recede. We were at 7% inflation in the US. Now, as we speak, we are just around 4%, and they've started to recede very significantly. Crude oil prices have been pretty stable. Natural gas prices and other input costs have come down significantly, which gives us comfort that inflation could cool off eventually in the next couple of quarters or so. So all these factors which were driving gold prices have, I think, largely been taken care of.
Sure.
PMI numbers, manufacturing numbers have not been very robust, but they will take about 1, 2 months to jump up very sharply, and that could be changing the minds of most of the investors and traders. So I am pretty confident that the macro numbers which were driving prices have now taken a back seat, and until we see further escalation or probably the actual recession heading or landing in the next quarter, we've largely overplayed our bets.
Okay, got it. That's a very, very strong view coming in on gold. Okay, so then let's move across to silver, and really what's both of you anticipate on that front, or, for those who are still looking to invest in commodities, let's get your view, Vandana, on silver and whether or not we'll see better opportunity for returns there.
Yeah, silver is a shining metal, and the shine will increase by the in the years, because the more we talk about clean energy, green environment, the more silver will be used by the various like companies and factories and everywhere. And since 2012, we have seen first time in 2022 that the demand surpassed the supply side. So it is happening, and even in this year, the demand will higher than the supply side. So this time we are expecting that the gold silver ratio should improve towards 1 is to 75. It hit the low of 1 is to 95, 1 is to 97 in 2022 when the war occurred. What started. So, like in coming years, we are expecting that silver will outperform gold, and in international market, we are expecting that there should be a higher side target of around $35 to $36, and surprisingly, it hit a record high of $50, and now it is trading near the level of $25. So it is almost half prices down from the record high, and gold is making record high every day. So this is the time when silver will outperform gold, and the industrial demand is increasing, and it will push up the silver prices. And marginally, the silver ETF buying is also increasing. So this is another positive factors. And in domestic market, we are expecting 85,000 kind of level next year in silver.
Okay, fantastic. Well, I think we should have spent longer talking about silver then, since clearly there seems to be a lot more opportunity there right now as gold softens. But you touched upon ETFs. I just want to get a quick view from you as well, Navneet, on whether or not that would possibly still be your preferred avenue for investing in gold if one was still looking to do so.
Well, for silver, we and Vandana both are in concurrence, and we strongly believe that silver prices are headed northwards. Probably 85, 90,000 is where we see silver as we approach the end of the year. Largely from the macro fundamentals. See, silver is a mix of industrial metal as well as precious metals. It is moved in line with precious metals, but industrial metals have not participated. Say probably in the last 3, 6 months, they've been pretty weak. I believe that as we approach the third or fourth quarter, it is going to be a win-win situation for silver, because we expect that strong demand is likely to come up from China. US is likely to bounce back, and European demand is also likely to stabilize. Of course, India has been pretty resilient to the economic fears, and Indian demand continues to remain robust. So that gives me a lot of comfort that we imported about 9,500 tons of silver last year, and around the world production is about 25,000 tons. So about 40% of the world production was imported in India last year, and similar numbers could be seen probably in the next couple of years, and also which is very comforting that silver demand has been pretty robust. Now talking about ETFs has been a big investment avenue, and people have been wanting to invest in silver for some time now in the domestic front, but there were not enough avenues. But ever since the last in the last one year, we've seen a good amount of funds coming out with silver, and the demand has been pretty robust, pretty stable, and the addition has been pretty decent, and which is also reflected in the huge imports of silver which is coming into India. So I believe that the story is long drawn, and probably for the next couple of quarters or probably for a year time frame, that could be the best bet, giving you about 20% plus kind of returns.
All right, fantastic. Great speaking to both of you and hearing both your views. I'm glad we found, some consensus at the end of it, and good to hear what's happening in the world of precious metal. Thanks so much for joining us.
If you like the video, do like, comment, share and subscribe.